Welcome, everyone. You're listening to the Advocis podcast. I'm your host, Stacy Brooks, and welcome to a very special Financial Literacy Month edition of our show. Today, we're diving into a candid, timely, and necessary conversation about money, and more importantly, what it means to build financial resilience in a time of economic uncertainty. From rising inflation and market volatility to global trade tensions and interest rate anxiety, Canadians are navigating a landscape that is anything but predictable. So, how do we stay confident and financially grounded throughout all of this? Well, that's exactly what we're here to talk about today. I'm joining a powerhouse panel of Advocis members whom I've worked with personally in various capacities. Carmela Lombardi, Tehranchian, and Julie Laferriere, all seasoned professionals who not only guide clients and advisors through economic turbulence every day, but who are also passionate about financial literacy, resilience, and empowering Canadians to face uncertainty with confidence. This year marks the 15th anniversary of the Financial Literacy Month in Canada, and as we celebrate how far we have come, we're also looking ahead at what Canadians need now. Not just knowledge, but actionable strategies, smart conversations, and trusted advice. So let's get into it. I'm thrilled to welcome our guests to the show. Let's start with some quick introductions so we can get to know these ladies really well. I'd love to hear each of you tell us a bit more about who you are, your connections to the Advocis community, and how you're helping Canadians build financial resilience in today's economy. So this question is for everybody. So, Tina, let's start with you. What inspired you to become a financial advisor?
That's a good question. So I never grew up dreaming of being a financial advisor. I did not even know what a financial advisor was when I was growing up. But I came to Canada in 1990 at the beginning of a very tough recession, and I have a master's in communications and wanted to find a job at CBC in TV production, but they were laying off thousands of people at that time. So I just started a job at Sun Life. I thought it was going to be only a few months until the recession ends, but I fell in love with it and it was a great fit. And that's how I became a financial advisor.
Fantastic. I think everybody becomes a financial advisor by default career choices. Mm-hmm. Carmela, how's your story?
So very similarly to Tina, I'm not sure that I actually set out intentionally to get into financial services. I actually graduated wanting to get into criminology, either as a lawyer in a lawyer capacity or as a criminal investigator. And I think that part of the reason for that is that I was always fascinated by the link between behavior and action. So while there's a bit of a departure between financial services and criminology, I quickly discovered that there's parallels because, as all of us know here on the panel, behavior, money behavior is closely linked to money is closely linked to behavior. And I quickly realized that I could be a real difference maker if I learned how to properly utilize that money conversation into guiding and directing clients to making good financial choices for themselves. So that's what had me dive in, and 20 years and still here.
Wow, that's a fascinating story between law and criminology to financial literacy and financial management. See, everybody, there's no one way to get to financial services. Julie, what about your story?
Yeah, so my story's a little different than the two ladies. I actually did set out to be in this industry. I'm actually not a financial advisor, so some of my insights might be a little different, but I entered this industry 25 years ago. I lost two dads tragically, one in a car accident at 21 and one due to stomach cancer at 46. And for me, what I quickly realized was the importance of financial advice, the importance of proper risk management strategies. When I would set out to seek to learn about it from others, I quickly realized no one truly understood our industry. So for me, I decided to enter this in a different way because I felt like I could cast a bigger net if I supported advisors directly. So for 25 years, my role has always been centered around supporting financial advisors, and most of my career has been around risk management solutions.
Fantastic. Three very diverse stories. And my story is similar to Julie's, but not from the personal perspective, as I actually went to school to become an accountant and realized I had too much personality for it. And, BRIAC sort of happened a long time ago because I was terrible with the zeros, either too many or too little. And I too am not a financial advisor, and my 25 years has always been supporting financial advisors and financial literacy. So I think we have a phenomenal panel here today with such diverse backgrounds. So with the tenure that each of you have in this industry, maybe help us understand, how did you get involved with Advocis, and what's your current role or engagement with the association?
Yeah, of course. So, for me, I've always seen Advocis as it represents the voice of our profession. So shortly, I've been life licensed now for about 3.5 years or so, and hearing from others about the access to education was just something that really resonated with me. But beyond supporting me as a financial advisor, I wanted to make an impact in the world of financial literacy because I see that as a big miss. So, just joining Advocis was a natural step for me. And I jumped in first as a member. I currently serve as chair of financial literacy within the Durham chapter and co-chair of programming. And I am incredibly blessed to serve on a chapter that's highly collaborative. But for me, I'll say this, is that something that really stands out are the network that I've been able to build along the way. It's really helped me professionally and also personally. Some of the peers that I've met along the way because of my involvement with Advocis has really, some of them have gone on to become members and collaborators. We've sparked some meaningful conversations as a result of those associations. And, it's just one of the reasons that continues to keep me engaged. And it really signifies to me that, when you're part of something that's bigger than you, it makes you better at what you do. And I'm happy to continue to stay engaged.
That's so fantastic. Julie, how about yourself? Because I know you've served several roles within the association.
I have. So I was actually trying to think. I think I've been a member for, we're going to say 20 years. I have truly lost track. And I've been literally in probably every role on the board. And I've served on the board for about 7 years, I would say. Currently, I'm program chair. And to be honest with you, the reason I chose that role is because I truly believe the content that we can bring to some of our meetings is really what shapes how these advisors can bring that information back to their clients. A quick example, a couple of weeks ago, we did something on AI and crypto, and just giving them tidbits so that when clients ask about that type of information, we're able to kind of have meaningful conversations. So that's my current role on the board.
Program is a lot of work, and I think there's a lot of us here who has kind of helped shape that to share that elevated knowledge to the community. What about yourself, Tina? I know you serve now in a new role with the association, so help us understand a little bit more about your involvement.
Sure. I joined Advocis in 1991, so I've been a member for 34 years. And back then, I remember the manager that I had, it was pretty much a must for everybody in the branch to be an Advocis member. And I'm so glad that he encouraged me to join. My main incentive initially was education. I wanted to become a CLU. It was the most prominent designation back then. It's still one of the most prominent designations. And for me, it's always been the best source of education, meeting colleagues who are very serious about this business. And the advocacy part of it is very important for me too. I think having an organization that stands for financial advisors and what's important to us and to our careers, it's very important. We should all support such an organization. So I'm very honored to have been elected. We had an election for the board for the first time in June of 2025, and I'm serving on the national board now.
That's a fantastic story. I think I've been a part of Advocis now for probably maybe 8 years or almost 10 years. And what I've come to celebrate about the association is just with great pride is doctors have an association and CPAs have an association. And I think financial advisors should be proud to have an association. And it really is for those reasons for that you guys have mentioned, advocacy, elevated knowledge and education, and definitely for the fellowship. So, welcome, ladies. I think, with the choices you guys have made by default to some degree or by choice or just by coincidence, within this world of financial literacy, maybe help us understand, what is your personal relationship with money and what has it been like and how has it evolved over time? Maybe Julie, will start with you this time.
Yeah, it's funny because most people are raised that talking about money isn't polite. For me, my experience has been a little different. I was raised by a banker for 47 years. So financial discipline was ingrained in me. And honestly, we talked about money at the dinner table almost every night. We certainly lived within our means. My parents had a budget and they never spent what they didn't have. So that mindset has certainly shaped who I am today. I would say most folks say I'm probably too much of a saver, which I guess could be good. And I'm trying to instill those values in my own son. One thing that that resonated that my mom always taught me is it's not what people make, but what they spend. And, I've come to realize that it doesn't matter what you make. You can make $1 million, but if you still spend 1.2, you're not doing the right things financially. So those have been my experiences.
Fantastic. Thanks for sharing that. Again, financial literacy to the next generation, so important, especially with all these social influencers telling it's the lifestyle. What about yourself, Carmela?
Yeah, so very different from Julie. I, got my first experience with money long before entering this profession. As so many of us Canadians, I was born into an immigrant family that arrived from Italy with very, very little. And language was a barrier. I myself wasn't able to speak English, a lick of English, until I was about 7 or 8 years old. So because I learned the language before my parents learned the language, I was put into situations whereby I was responsible for translations, right? Whether it be accompanying them to bank appointments or helping them in the filing of their taxes. So I that came from a position, not necessarily of wealth, but one of necessity. Being thrust into that situation, I didn't realize it at the time, but I was actively involved at that money conversation from a very early age. But here's what it taught me is that in helping my parents navigate this strange new world with anxiety and some stress, I realized that behavior is behind a lot of those financial decisions. And yes, on the one side, it must have been extremely scary for them because it was very complex and foreign. But on the other side of that was this optimism that emerged for wanting to create a brighter future, not just for themselves, but also for their family. And I learned at that point, and this is something that I help my clients with, is really this concept of, money, when it's used intentionally and with purpose, can be so powerful at creating choice and optimism and opportunity. So that's sort of my experience with money, and I try implementing that in those everyday conversations with clients.
That is a very fascinating story with so many individuals that are immigrants to the country, and you may be the youngest adapter of the English language, the things that you learn at such a faster age. Tina, maybe share us with your story, because again, also coming to the country in 1990 in turbulent times.
My story is very different from Carmela and Julie's. I was born in Iran and I had a very comfortable childhood. My father was a doctor. He was a hematologist. My mother was a nurse midwife. They made very good money and they were good savers. And I do have memories, from my childhood watching them save their money, roll the banknotes, put it in a little box. But you know what? My parents were not good at financial planning. They were not good at planning their retirement, and they made some major mistakes. They also faced the revolution in Iran, which kind of turned our lives upside down. And it was a big eye opener for me to see how you could make very good money, but if you have not planned properly, if you're not diversified, if you have not given thought to risk management, you could lose most of it very quickly. When the revolution happened, money became an issue. I'd never thought about money before that, and my parents never talked about money to us because it was not an issue. But then, we had a collapse in currency. It was difficult to send money outside the country. So my youth actually was shadowed by stress about money the entire time. And maybe that's one of the things that attracted me to the career of financial planning, because I saw what a big difference it can make in people's lives if they have a solid plan in place. And financial literacy became a huge issue for me. And I've been championing it since then. And I'm very glad that I stumbled upon this career because it brought together many different factors of my life for me.
Well, I think that's a very common thread in each of your stories that you've shared. And I think it's the science between it's one thing to make a lot of money. It's another thing to save money, but it's another thing to invest that money, but invest that money with strong strategic partnership with, a licensed financial professional. So, as we are, in this current economic climate, what Canadians are facing a lot currently in this global scenario. And, some of the things that they are facing is, from inflation and interest rates to the global trade tensions, housing affordability. Canadians are feeling significant pressure. In fact, I'm going to start today's conversation about the top 10 things Canadians are most worried about right now and when it comes to money. So it's not an exhaustive list, but I think these are probably 10 things that we can probably all agree on. And, the first one, of course, is inflation and rise in cost of living, high interest rates and mortgage renewals, affordability of housing, job security and economic slowdowns, actually. Retirement savings falling short. Again, a lot of people are in retirement and, maybe a little bit worried about outliving their retirement dollars. Market volatility and investment uncertainty, increase in debt loads, cost of raising children and education. I got one in university. Healthcare costs and aging parents. A lot of us are in the sandwich generation. And of course, global instability and its economic ripple effect. It's a long list and it's an exhausting list. Even just hearing those 10 things, never mind other things we may not have mentioned. But you're not alone if you're feeling uncertain or overwhelmed. The good news is that talking openly about money and working with trusted financial advisors and financial planners can make all the difference. So, in Canada, we're often told not to talk about money. The workplace, sometimes at home, amongst our friends. It's private, it's impolite, or even taboo. But staying silent can only make financial stress worse. So we're going to ask these ladies some questions about, maybe demystifying the taboo about talking about money. And Carmela, I'm going to start with you. Why do you think it's still so hard for Canadians to talk about money openly?
Yeah, so I really appreciate this question because this is one of those things that we talk about with clients all the time, and often they feel like they're in isolation. The fact is that this is a far-reaching thing. And I'll start by saying this. I feel like money represents our sense of identity and our sense of self-worth. And so because of that, it's viewed upon as being something quite private. So that may contribute into why it's such a difficult topic of conversation. As we all mentioned, not all of us, like Julie, for instance, she grew up in a home that really talked about, finances and money. But a lot of us grew up whereby that was something that was either seen as either too private or too complex, and it just wasn't part of the everyday conversation. The other contributing factor, of course, is the fact that, for many Canadians, we graduate with these big fancy degrees, but financial literacy is still highly lacking within the educational system. And oftentimes, if you graduate as an engineer or a doctor or a lawyer, for instance, it might be a little bit embarrassing that you might not know the difference between different investment platforms, for instance. So that can sometimes limit the conversation. And then thrown into the mix a little bit more recently is, the impact of social media, because that's really heightened and amplified some of that problem. We see these carefully curated snippets and reels of what a lifestyle is supposed to look like, right? Homes and fashion and vacations. And, people are often comparing themselves to this, that's the true meaning of fake news. And, sometimes when we're comparing against this unrealistic standard, it makes it really difficult to maybe bring up how we're personally struggling or even asking questions. So for me, I feel like the truth is really in, it's that silence that it's really keeping people stuck. So the sooner we can begin to demystify and promote those everyday conversations, the closer we get to building confidence.
That's a great question. And Tina, I'm going to ask you to build on that a little bit more with, what are the risks of staying silent about finances at home, work, or even in relationships?
It's a very good question. I've always encouraged my clients to talk about money with their children and having encourage intergenerational conversations about wealth. I think it's very important to share that information with the next generation. So I'll tell you about a story that really highlights the dangers of not talking about money openly and honestly with your family. It's a story of a family that were not my clients, actually. These were people that I knew through the community. And they were a very respectable family, middle class, had stable jobs, nice home. The facade was beautiful. They looked very successful. And they had 2 adult children, a son and a daughter. Their son decided to set up a business and ask them for help. He had no idea that his parents had a fairly large mortgage already on their home. They were not in a financial position to be able to advance him money, but they could not say no to their son. They genuinely wanted to help him, and they did not disclose anything about their financial situation. They wanted their children to think that they were successful and in no need of any type of help. So they went and got a second mortgage, advanced the money to the son, who did not have a proper business plan. He went bankrupt after 1 year. That money was lost. And in the meantime, the parents had some financial issues. They ended up declaring bankruptcy themselves. They lost the home that they dearly loved. And as part of the process of declaring bankruptcy, they had to tap into every resource that they had. And one of those resources was an RESP that they had established for their only grandson at the time. That was the son of their daughter. The daughter had no idea that they had declared bankruptcy. I only found out because they came to me asking for financial help during that very difficult time. So they disclosed some of their financial information to me. When all the daughter knew was that they had helped their son start a business. The son went bankrupt, but they had not only not helped her in any way financially, but they had cashed the only financial gift that they'd given her, which was the RESP for the grandchild. As a result, the daughter thinks that she was mistreated. She's not talking with her parents. it's a very sad situation. And honestly, if it was not for privacy, my heart was going out to them. I really wanted both kids to know what the situation was, but the parents did not want to disclose anything about their financial situation. So it can be very dangerous not talking about money.
Wow, financial intransparency within a family dynamic is can be detrimental. And I think, part of that is within the conversations that hopefully more families are having, like Julie had when she was at her dining table. Carmela, I'm going to ask you to maybe share with us, give us an example of when money conversations within your client base or your client engagements made a real difference for somebody.
Yes, of course. So, I'll start by saying this is that one thing that I've noticed within our profession and in our industry is that there tends to be a big focus on those large cases, right? We all like to talk about those large cases or, a significant amount of assets under management. And of course, working with high net worth business owners or individuals is very interesting for most of us. I don't think that any of us would disagree on that. But I'll share my personal experience and the way that I've had a lot and I've made a lot of impact is by working with everyday families and everyday Canadians working on their business. It's where I've gained a lot of personal satisfaction. So the example that I'll share is for many of you, you might know that I got my start in setting up RESPs. So it's interesting that Tina would use the RESP example just a few minutes ago. So working with new parents who are often sleep deprived, often an RESP is their first experience entering the financial world, and they don't know a lot. And so the one thing that they do know is that they want to create a bright future for their child. So they reached out a little bit overwhelmed, not really knowing how to set things up. And in having those initial conversations and highlighting the value of making small, consistent contributions, how that could be so uniquely transformative for that child, was almost a little bit abstract for them because this was something that they wouldn't be drawing upon for potentially 2 decades. But they did that. And my experience with the amount of years that I've been within the RESP sector is that I've seen this so many different times, and it gives me such immense sense of personal satisfaction because in managing that relationship over the years and monitoring that progress, and then finally seeing the result of all of that effort and having that child, that baby, then draw upon those funds and use it for their post-secondary. I mean, it's such a feeling of accomplishment. And I've been really lucky because I've been in that sector for so long that in some cases, I've had those same kids come back to me with children of their own and, talk about paying it forward and creating a legacy for that next generation. So, for me, I get a lot of personal satisfaction out of stories like that. And this is just one of the ways that we can make such a big difference and impact everyday people.
2 very contrasting stories. Now, Julie, you get the pleasure of working with so many different advisors like Tina and or Carmela in your day-to-day basis. From your perspective, what role can advisors or MGAs play in opening up the conversations more to talk about money?
Yeah, I decided to focus on the advisor role, and I only support 1,100 advisors right now, Stacy. So but I just truly believe the advisors are so uniquely positioned to help with those money conversations. But the key is to address those conversations, and not everyone does, with empathy, with curiosity, asking, not just that first question, but going a few layers deep. And then with no judgment. I think if you can come to those conversations with that mindset with your clients, then they will feel safe and will share with you their goals as well as their fears. Most advisors I work with, they're not just talking about the numbers. I think the numbers tells a story, but when you think about it, advisors are really getting to know their family dynamics, blended families, their careers, their aspirations and where they'd like to go, trips they'd like to take. And I think finding out what keeps those clients up at night is just so important. So in my opinion, a good advisor wants to take the time to just really understand what matters most and then implement strategies that are customizable to that person. And I read this saying the other day, and it said, when you think about it, at its core, financial advice is a relationship business built on empathy and trust. And that really resonated with me, because at the end of the day, this is what will help someone stay the course, whether markets get bumpy and life gets in the way. But it's really such an important aspect that we do with our clients and how we can help.
I think that's such a powerful quote. I think I'm going to ask you to email that to me so I can have that for my own reference, because I do believe that this is industry and a relationship built purely on trust and, helping and, at its core, money is a tool, but knowing how to use the tool does require some level of guidance. And, as we continue to weather the economic storms, it's tough. Like it's a tough weather to do it alone. And this is where financial advisors come in, especially the ones we have here today, especially with credentialing professionals who understand the full picture and are really able to help steward, clients through this journey at this particular time. So, I'm going to start off again with Julie with this particular question when it comes to that sentiment. What concerns I would say clients, but your advisors are your clients, or clients or advisors are coming to you with right now? Like, what are the conversations are you engaging in or having with advisors right now in this current economic climate?
Yeah, this was interesting. This one made me think because, clients right now, there is a true heightened uncertainty as to what's happening in the world right now. And so it's not just about the markets. I think both of you ladies would agree, rates of return are one thing, but there's so much constant stream of news happening whether it's the US tariffs, whether it's global markets, some of the geopolitical tensions that are happening. All this stuff is really weighing on the average Canadian. And people are realizing that these global events can really have an impact on our everyday lives, whether that's the Canadian dollar, whether that's our grocery prices, the cost of lumber. It's affecting our investment returns. So folks are really just not sure about what's happening right now in the world. And this uncertainty, is leading to a lot of anxiety. And this is where working with a credentialed advisor can really help. They can help explain what's noise versus what's actually actionable, what we need to worry about, and where we just need to stay the course. They will build plans for their clients that can weather these short-term disruptions. So it's really just helping people stay focused in a world that right now is so uncontrollable.
Some key points to Julie, and I'm going to turn to Tina for this next question, because you touched on so many things. And as somebody who's having conversations with, clients and or business owners, Tina, tell us how are you helping your clients navigate uncertainty without panic or losing focus, especially when a certain individual speaks on a daily basis?
Well, Stacy, I've been in business long enough to have seen many different cycles, from the tech bubble to the financial crisis, you name it. And there's always worry in the markets. I've never had a single period in the markets where everybody has been calm and thinks that there's nothing to worry about. I think the best thing to do, because diversification is key. Markets, usually you do not have all sectors go up at the same time and all sectors fall at the same time. So it's very important for clients to be properly diversified in the right sectors, in the right geographies, and in the right markets. It's also very important to focus them back on their plan. So each and every one of my clients has a financial and estate plan. We use assumptions that are very conservative, and I track their plan on an annual basis. We track their net worth, and that's what I bring them back to. And I say, listen, we did this plan for you 2 years ago. We thought that your net worth would be so much, and you're actually ahead of the plan. even though we may have had a crash in the market. And yes, maybe the markets have fallen, but maybe your business value has gone up. And sometimes, real estate is not in good shape right now, but generally when markets were good, real estate would not be doing well and vice versa. So again, is focusing them back on the plan, their entire net worth, rather than just a tiny bit of it that may have been affected by the markets. And that really makes them calm, and it helps overcome their anxieties when they know that they're on target.
Yeah, I think that's great, because oftentimes when the market, when we hear the news goes up or down, it's a very short-term thinking. And it's a good reminder to know that the plans that are put in place are based on long-term goals, medium or long-term goals that they've indicated that are important to them. Carmela, maybe help us understand, maybe share with us, where professional advice have helped clients or someone, adapt or stay resilient, during some of these turbulent times.
Right. So, I think that we all have no shortage of stories that we can share with regards to this topic, but I'll preface the story with a bit of a statement. And this is a statement that I sometimes share with clients. And that statement is, if you're looking to make the wrong decision, ask everyone. That's a surefire way to make a wrong decision. And what I mean by that is that I mean it obviously in a very lighthearted way. But, oftentimes if you're seeking financial advice from someone that's not skilled or qualified to give you proper financial advice, what you're getting is nothing more than an opinion. Right. So, for so many times I'm working with clients that want to ask their parents or their neighbors or their colleagues or their siblings on what they should do in a certain situation. And they're looking to them for guidance. And of course, people mean well. They've got good intentions, right? But, financial advice, as we all know, is not a one size fits all. And what might have applied for our parents' generation, where tax rules were different, retirement planning was different, the economy was different, investment accounts were different. I mean, all of those things might not be relevant to you as an individual. And so I feel like part of our role as financial advisors and financial professionals is to demystify some of those beliefs. I mean, I still talk to people that feel like investment is a form of gambling, or, they make these crazy generalizations that all debt is bad. So, that's part of our role. And now to kind of get into the story that you had asked me to share, Stacy, I was working with, I met some clients at a social event. They weren't clients at the time, but they were successful business owners, and successful in the sense that they had accumulated some money as retained earnings. So very, very happy about that. And in passing, they were asking me about ways to lessen their tax burden and really create more wealth. I mean, it's a common gripe that we hear, that people feel like they're paying more than their fair share of income taxes. That's not something new. So fortunately, and I say fortunately because these particular clients, a common challenge that we face is that, sometimes people are not necessarily open to receiving that advice. And fortunately, in their case, they were not only open to hearing about it, but they were keen on implementing some of the solutions that I introduced. So not only were we able to fix that tax burden, but we were able to repatriate some of those retained earnings and really create a strategic asset. So fast forward to a few years later, the economy had tightened somewhat and they were operating in a very competitive space. Having put those solutions in place a few years prior allowed them to tap into some of that and really make some significant investments within their business. And they basically left their competition behind. So it allowed them to advance in a way that they might not have otherwise been able to. So to echo some of what Julie said, I think that our role as advisors is really to drown out some of that noise and to bring clarity so that clients can make good, educated choices.
Yeah, thanks for sharing that. That's a great example. And, I'm going to throw this back to Julie because she brought up, designations or credentialing at the start of her conversation. And as a credential holder herself, who I know she's worked really hard for it, what makes Advocis advisors and credentials like the CLU, the PFA, CFP, et cetera, particularly valuable today in the conversations that, advisors are having with their clients?
When you think of it, at the heart of it, Canadians are looking for someone they trust. There's so much noise out there with the internet. They're looking for clarity and they're looking for confidence in their financial advice. So when you work with someone who's part of Advocis and who holds a designation, whether that's a CFP, a CLU, a PFA, you're really working with an individual who's committed to education, ethics, and ongoing professional development. I mentioned before I work with 1,100 advisors. Do all of them have a designation? No. So it doesn't mean that they're not great, but I do think there's just, especially today, there's so much in those designations that goes far beyond just this, the ethics part of it. When you do these designations, you're really learning various things. I did my CLU and you learn different tax strategies, you learn different investment strategies, and all of that really helps as you kind of move up market and deal with more complex situations. So with Advocis, I think it fosters a sense of community and professionalism across the industry. So again, it's really not about just the designations, but it's being a part of something, a network where collaboration, mentorship with other advisors really just helps elevate our standards when we give advice to our clients.
I couldn't agree with you more. I think, in addition to confidence that the elevated designations apply, it's also competence. And I think within that competence, it really does allow for those deeper conversations to kind of go to the layers to really put the right strategy in place and hopefully open up the conversations within the family or the business dynamic. With that being said, let's take a look at the bigger picture as well. And there's a lot happening economically, as we can all see. But what does that actually mean for the average Canadian? So, Tina, I'm going to throw this question at you, to you. What are some of the biggest economic trends or red flags that you're seeing in terms of, maybe interest rates or inflation or global stability? What's coming across? What are you seeing the most, or maybe what are your clients coming to you with the most in terms of phone calls or emails?
It's a very good question. So one of the biggest anxieties that my clients have right now is the fact that markets have been going up sharply. So people don't just get anxious when markets fall, they do get anxious when markets go up sharply as well. And again, it's a matter of going over their portfolio, making sure that they're well diversified enough to be able to weather any storm that will be coming along the way. And I know people sometimes say this time is different, but no, markets do retreat every once in a while, and you have to be prepared for those, and you have to be exposed to the right parts of the market. You still want to participate, but not at the expense of going through a downturn that may be beyond your risk tolerance. So that's one of the biggest causes of anxiety for high net worth investors. And then they're also worried about their children and the next generation, things like housing affordability and job situation. Those are things that worry even wealthy families because they're worried about the future of the next generation.
Yeah, I think, we may have a lot of extended children staying at home longer than intended today for those very reasons. And, to speak of that, it's not to say that these the next generation are not hard workers or ambitious or resilient, but the scenario is a lot more challenging. So, Julie, how are these issues affecting Canadians financially? And, you talk about savings, but, how is it impacting these Canadians or these clients?
Stacy, you're right. Canadians are definitely feeling the pressure right now. So let's kind of like chunk these all out. If we kind of look at the borrowing side, Most mortgages have been renewed. I think this year there's like I don't know the percentage, but it's quite high. Lines of credits, credit cards, all those rates have more than doubled where they were just a few years ago. We had a stat from Manu Bank, and it showed that some people are only making their minimum payments right now on some of these debt items. So this is leaving a lot less room for people to save or on discretionary spending. When it comes to savings, I think this is the challenge that people are having to make tough choices. Even a very disciplined saver has to now say, do I still, invest money in my RSPs or TFSAs when groceries are so expensive? Gas has gone up. Our utility bills and property taxes keep climbing. So we're now making choices between continuing to save versus paying some of these bills that unfortunately we must pay. And now let's talk about our younger Canadians. My heart goes out to this next generation. They're trying to save for first homes and build emergency funds while their incomes are just not keeping up with the rising cost of inflation and where that's headed. So this next generation is definitely going to experience some challenges. And then lastly, I'll touch on the spending side. I think we're seeing more cautious consumer behavior. Canadians are still spending, but what I'm noticing, I feel like a few years ago, everyone bought boats and quads. And so folks have reprioritized essentials over luxuries, and they're really going back to basics and trying to live within their means.
I think those are really key differentiators that you've kind of highlighted between, how we're saving, how we're borrowing, how we're spending, the current climate that each Canadian or each household is actually faced with in terms of priorities, with just common day-to-day essentials that have, doubled or tripled in price. Like, the 30 pack of eggs used to be like $4.99. Now it's $10, right? But kids don't stop eating, right? So, with that being said, Carmela, what should people keep an eye on over the next 6 to 12 months?
Right. So that's a bit of a loaded question. I mean, the next 6 to 12 months, I feel is going to continue to be a period of adjustment. We've already alluded to some of the factors there. I mean, rising cost of interest rates, what's going to continue to happen with that, because then that has that spillover effect into mortgages and savings and debt and consumption, all of the things that we've already talked about. It certainly has a ripple effect, right? Inflation, of course, we're feeling squeezed by the reduction of buying power. So that'll be something else to be mindful about. That's always a very important piece of the puzzle. And, that impacts day-to-day budgets. That also impacts long-term plans. And then, of course, government policies, our relationship with our friends to the South. Earlier this year, we were quite literally terrified on what was going to happen. And we're still seeing that spill over into our day-to-day life. And, I'll with regards to that, I'll mention something really quickly, is that sometimes the things that we are interpreting as challenges can also create opportunities, right? So that's just a different mindset and a different approach. But beyond watching the headlines, something that I often speak about to my clients is, forget about the news. Focus on your own numbers. Focus on what's going on within your own household. And, questions like, are your savings, are they aligned with the rising cost of living, right? Are you managing debt in a way whereby an interest rate is not going to be something that catches you off guard? Are you taking advantage of tools like FHSA and TFSA? I mean, we love to gripe about taxes and how much we, as Canadians, we seem to love to pay taxes in this country. But I'm still amazed at how underutilized investments accounts like TFSAs are amongst a lot of people that I speak to. And if they are utilized, I'm still seeing too many folks have money just sitting in cash in a TFSA account. So that has to change. And that comes, we bring about that change by properly providing that level of education that heightens their decisions and their buying power. So, that external landscape, that's going to continue to evolve and it's going to continue to change. I think we can all agree that that's not going to stay the same, but it's really the key is to build a plan that can be resilient, but it's flexible enough so that it allows us to pivot. And it really comes down to being prepared and nimble so that you can adjust to the changes as they approach.
Those are really great points. And, I think part of it too is just, through financial literacy and, partnering with the right financial professionals, it's also helping Canadians really understand what the difference are from product to product, strategy to strategy, or concept to concept, because some of it, the language they hear TFS say, they don't really understand the power of what that is. Tina, you have been a financial advisor longer than all of us here, so you've seen a lot of ups and downs. Are there any common misconceptions that, you would like to address that maybe we have not touched on so far in this conversation?
Yes, definitely. I think some of the biggest risks to investors come not from the markets themselves, but from the narratives that surround the market. So right now, I think there are three big misconceptions about the Canadian economy and markets that I see repeatedly influencing the behavior of investors. So the first one is the idea of Canada is in free fall. So headlines can make it sound as if our entire economy is collapsing, and that can make people nervous and push them towards a duck and cover mentality. But in reality, we are seeing pockets of stress in the economy. The parts that are exposed to trade and tariffs are certainly under significant pressure, but parts of the domestic economy remain very resilient. Growth is slower, yes, but it's not uniformly negative. So this means opportunities still exist for investors, particularly in sectors with strong balance sheets, sectors that have strong domestic drivers for demand, or have structural tailwinds. The second misconception is that interest rates cuts alone will save the day. So there's a tendency to think that as soon as the Bank of Canada cuts interest rates, the economy and markets will improve and they will snap back. But monetary policy is not a silver bullet. When business confidence is weak and there are structural issues at play, lower borrowing costs do not automatically translate into growth. And that's something that we have to keep in mind as advisors. We need to temper expectations of our clients and make sure that their portfolios are positioned for a gradual and uneven recovery, not an instant rebound. And the third misconception is that trade and tariff risks are temporary, and they will pass without leaving any lasting damage. In reality, uncertainty has a way of reshaping behavior. And companies delay investments when they're faced with uncertainty. They rework their supply chains. And sometimes those changes will stick and they will become permanent. So even if trade tensions ease, some of those scars remain. And for investors, it means thinking in terms of structural shifts that are happening and thinking about which sectors and companies are adapting successfully and which may be left behind. So from a wealth management perspective, the key is to cut through the noise. That's our job as advisors. Instead of reacting to these narratives, we should focus on sectors that are resilient, policy sequences that will affect the outcomes of all of these changes, and look out for sectors that can structurally adapt. So that's how we can help protect capital and uncover opportunities, in an environment that is challenging, but definitely is not hopeless.
Well, that's some real sage advice and wisdom that you've shared with us in regards to some of those other key components that are important to the conversation and to the guidance that advisors can take into their conversations, but also pass on to their clients. And it really just continues to speak to the resiliency that we're facing in this current economic climate. So resilience, it really isn't just about, having money, right? It really is about, like you guys have shared, it's the mindset, it's habits, and it's the support systems. So, Carmela, you work with the family market, spending about 20 years with the RSPs, clientele. What are some actionable steps people can take right now to build financial resilience?
I guess one of the first points that I'll make is that when I think of financial resilience, I don't think it's about predicting, right? None of us, even as financial professionals, we don't have that crystal ball to be able to project what may or may not happen in the future. And I guess that's the point. It's more about preparation, right? Putting yourself in the most advantageous situation that you possibly can put yourself in. And, interestingly, this is one of the questions that I'm asked most often from clients is, help me prioritize my finances. So I'll give you a little page of my playbook in terms of how I generalize a little bit. So the first most practical step, I would say, is really ensuring that clients have properly set up an emergency savings, right? Something that's not tied to the market. Maybe 3 to 6 months is generally a starting point of money that they can tap into if something unexpected comes along, like an unexpected expense, because let's face it, none of those expenses ever happen at a very convenient time. So they seem to catch us off guard. So when there's money that you can access, what does that do? It keeps us from loading up a credit card and incurring some future high debt that we'll later have to manage. And, or it keeps us from tapping into investment accounts that, it's like robbing from your future self, right? So if you tap into an RSP, not only are you accessing funds that were earmarked for a totally different purpose, but it can often trigger a tax event, which we're trying to avoid, right? So we definitely want to stay away from that. Next, I would say just helping clients take a close look at managing their debt. Debt can be a bit of a wealth killer. So helping them create a plan so that we're paying that down strategically. So that might mean things like consolidating, renegotiating terms, or even something simple like, let's just try to figure out what is your high interest debt. Let's tackle that first. And that can take a lot of the stress away. And then from there, obviously, another key area of focus is on risk management and protection, right? So it's hard to build wealth if we're not protecting. And this is where the financial education really comes into play, because so many Canadian consumers still believe that their homes are their biggest asset. And so providing that insight into your ability to earn an income is actually your biggest asset. So how do we go about protecting that? Through various types of insurances, right? Whether it be life insurance, critical illness, protecting their health so that they can have that safety net for their family. That goes a long way at instilling, peace of mind. And then finally, having real conversations about saving and investing as a real wealth builder and wealth accumulation. And what I would say about that is the key there is automating and putting it on autopilot, right? Because even small ongoing contributions, as we know, because of the gift of compounding, can be a real difference maker, right? So getting that in, making sure that it's automated so that it removes some of that temptation of, skipping a month or two. Sometimes we trick ourselves into thinking that we're going to magically catch up next year, or we're going to make up all of the money that we didn't invest this year. And it almost never works out that way. So I feel like these are just some of the steps that can really help empower a client into taking small actionable steps forward so that they feel like they're making a difference and they have more control over their finances.
Great tips. I think those are really great. Tina, I'm going to ask you just to add on that a little bit to maybe, help expand on why flexibility is so important in the financial planning process, especially during times of economic disruption or turbulence.
I think Carmela covered it well. It's important to, number one, to have a plan. Number two, do different types of scenario analysis in terms of worst case scenarios, best case scenarios, and be prepared for those worst case scenarios, and do risk management. What if one member of the family, if it's a couple, loses their job? How's that going to impact the planning? Is there enough emergency funds available for them to carry through tough times? And then again, focusing them back on what it is that they can control, because there are so many things that are not in our control when it comes to financial planning. I mean, you and I don't control interest rates, we don't control inflation, we don't control the markets, but we can control our own behavior. We can control how much we save, we can control how much emergency funds we have, we can control, whether we're doing automatic savings or not. So let's focus on those things, and that will build confidence in clients when they see that they're doing their part in terms of the things that they can control.
That's so true. You touched on something here that I think Carmela touched on at the start of the conversation, and it really was about, behavior and behavioral finance. So, maybe you can, expand a little bit on that and really talk about how are you helping clients manage financial stress and anxiety? Because that's a huge part of, the angst that's everybody's feeling right now.
Exactly. Yeah, it certainly is. And I think acknowledging it is the first step, really. Money stress is often not about those dollars and cents, but it's more around the uncertainty and that feeling of not having control that can, make us feel quite uncomfortable. And so that's why one of the first things that I do with clients is just really pause and try to understand the clarity, right? What's important to that client right at that moment. And that comes from that initial consultation or a discovery. I refer to my initial consultations as a financial health check. And if you think of, when we go and we see a doctor, that doctor is not sitting there with their prescription pad ready to diagnose us without first getting a clear understanding of what's keeping us up, right? What is causing the concern? So I feel like it really begins with that, is just really breaking down the situation into small bite-sized pieces, right? So that we can tackle that head on, and as Tina mentioned, what's within our sphere of influence? What's within our area of control? Because there's lots of things that, are bigger than all of us that we don't have influence over, and what needs our attention first, and what can we maybe put in the parking lot and circle back to it maybe at a later planning session. So I find that process alone, really reduces some of the anxiety around financial planning, because it shifts the focus from, everything feels overwhelming to, this is my area of control, and these are the areas that I can really have an impact over, right? So, and then I guess the other thing that I would just make mention as well is that what's really important for clients to understand, that it's progress over perfection. We don't have that magic wand that we can wave and just make everything perfect overnight. That's just not reality, right? So when you break everything down into small, consistent, actionable items, that can be a real difference maker. Making sure that we plan ahead with regular check-ins. Why is that important? Well, because we get to look back and we get to highlight the advances that we made. We get to highlight the progress that we've made with clients. That really makes them feel great, and they know that they're advancing their situation. And another thing that I guess I'll throw in there that just came to mind is, I think that the idea of working in isolation with clients in silos, being as an advisor, is a bit of an outdated model. If I have insight and know that a client is working with, say, their accountant or their lawyer, I will tend to bring those other professionals into our financial conversation, because together that allows us to provide better guidance that's tailored for that specific individual. And, not only does it build trust, but it fosters this idea that, you've got all of these professionals that are in your corner and they're all working together with that one goal in mind to get you to where you want to go. So, again, it goes back to planning and proper preparation.
That's great. And, Julie, you work with a lot of these advisors, and both Tina and Carmela said a whole lot of things, but you look at it from a more implementation or execution perspective. What are some tools or resources or habits, that has been part of the conversations that you're having with financial professionals?
Yeah, absolutely. I think the biggest thing, though, is financial resilience doesn't happen by accident. And I think we'd all agree on this call. It's something that you build intentionally through very small, consistent habits. So when I kind of thought of three different things when I looked at this question. One that hasn't been mentioned that I think is one of the most simplest, most powerful things we all can do is a personal budget or cash flow tracker. There's so many apps now like Mint and all sorts of, your bank will have typically a tracker that can kind of pull from where your budget's coming from, or it can just be an Excel spreadsheet. But I think the key here is just really knowing where your money's going. The second thing that's been mentioned, so I won't kind of reiterate, but certainly establishing an emergency fund of 3 to 6 months. And we kind of expressed the importance of that. And then thirdly is working with a licensed financial advisor. And, even when I put this down, this isn't a plug for our industry, but I truly believe it's one of the most important things Canadians can do for themselves. Advisors can not only help you stay the course, but they have access to software that can model your entire financial picture and let you know whether you're on track or going to be okay. They'll look at your income, your savings, your debts, your retirement goals, your burn ratio when you do retire. And then they'll look at all sorts of what if scenarios through a Monte Carlo analysis. So I just think it truly can help provide peace of mind for Canadians by knowing that a professional can review their plan, stress test it, and like I mentioned, make sure you're okay. And be mindful that when you do this plan, you certainly want to review it annually or when certain life events occur.
Great advice. I think, you guys have shared so much poignant and pivotal information and just very insightful strategies, ideas, and tips. And, as we wrap up, maybe we can just get some final thoughts on, as we round out this conversation, what's one piece of advice you'd give someone feeling financially anxious right now? And, Julie, let's maybe start with you.
Yeah, I guess coming back to my last point, just start small. Pick one or two things today. Review your budget, as I just mentioned. Set up a call with your advisor. If you don't have one, reach out to folks that may to get some advice as to one they're using, and take an inventory of where your money's going. I think, I just personally looked at my budget the other day, just money with my son being in school is just going all over. And that just eased my own anxiety with respect to making sure that I'm able to know where everything is going and make sure I'm okay. So take action, even small steps. And I think that will give you a sense of control.
Fantastic. What about yourself, Carmela?
So I'm going to echo a lot of what Julie said. I think it's always about pausing and giving ourselves a little bit of grace, right? And sharing that with clients is that, financial anxiety, sometimes it makes us feel that we're behind or we're not where we ought to be. But, the reality is that that's that little inner voice. That's actually a good thing, because that's that little inner voice that's telling us maybe something needs our financial attention. So pay attention to that little inside voice, but put action behind it, right? Because simply learning about something or simply talking about it without filling it in with an actionable step, keeps us where we want to be, keeps us where we are, and it doesn't advance us forward. So my best advice, I would say, is just focus on clarity over control.
And Tina, how would you round it out with, your financial, advice that you would share with someone?
I think it's important to start with cash flow. You need to get a good handle on your cash flow and how you're spending your money. And also very important to work with a qualified financial advisor who can help you create a proper financial plan. And then once you have a plan, it's not the end of it. It's actually beginning of a journey, because you have to track it and you have to track your progress. And as you go along, I mean, we all have a tendency to be very critical of ourselves, but I think it's very important to celebrate successes along the way as well. And that's one of the things that we do with the tracking of the financial plans. You know, when people are feeling nervous and they have a lot of anxiety about the future, you know, we just show them, you know what, you've been able to reduce your debt so much over the last 5 years. You've been able to improve your net worth. You're on the right track. Just keep doing the right things and you will get the best outcomes.
Wow, fantastic. So if I could ask you ladies to probably share your, in maybe 30 seconds or less, what is your personal mindset or mantra when it comes to financial uncertainty?
Okay, I love this question, Stacy. So I have so many different types of things that I could say, but I would say this because we're talking about resilience in economic times. So I would say that my personal mantra is that uncertainty is inevitable. Unpreparedness, however, is optional. And so what that signifies is that there's a choice in the matter, right? We don't get to choose whether uncertainty shows up. In fact, it most often will show up. It's inevitable, right? So, that's a constant both in life and also with money. And, markets are shift, policies are going to change. Life is going to continue to throw curveballs. We don't have any power over that. But what we do get to choose is how we prepare and how we react. And to me, that is incredibly empowering as an advisor, but also as an individual, is that, we don't give that power away. That's power that we hold within ourselves. So, what does that mean? How are we diversifying our investments? Keeping cash on reserve, making sure that we have the right risk management in place. I mean, these are all things that are within our sphere of influence. So I would say, panic is a choice, but so is preparation and mindset. Mindset is everything.
Fantastic. And what about yourself, Tina? What's your mindset or mantra?
I do believe a positive mindset is very important, and uncertainty is a fact of life. Everything changes, nothing stays constant. So you have to look for opportunities. To me, uncertainty means opportunity. And if you seize those opportunities and prepare properly for the future, you can capitalize on the changes that are happening all around you. The worst thing that you can do is to be scared and throw in the towel and want to get out of the markets and just do nothing.
And Julie, last words to you.
Yeah, no, the girls have said it perfectly, so I won't repeat, but I will end on one more topic that I think is just so relevant in today's world. And unfortunately, it's our new reality. And that's making sure that not only are we financially resilient, but also digitally resilient. So much of our life now, our financial life, banking, investments, even our insurance documents, are all online. And what we need to protect ourselves. So my message to all of you is use strong passwords, enable the 2-factor authentications, and just be very cautious every time you click or share. I think we all have stories of where this has ruined folks' lives. So I couldn't stress it enough. So protecting your information is part of protecting your financing. And so being cyber aware is just another piece of being financially resilient.
Wow. Well, you ladies have shared some very insightful and important conversation. And I want to thank you so much to our guests for sharing your expertise, your stories, your passion for helping Canadians build strong financial futures. As we wrap up this Financial Literacy Month episode, I want to leave you with this. In times of uncertainty, knowledge is power, but confidence is key. And confidence comes with understanding your financial situation, making informed decisions, and learning the right support, including financial advisors who are trained to guide you through life's ups and downs. Financial resilience isn't a one-time goal. It's an ongoing mindset. And it's important that all Canadians can cultivate the right tools, conversations, and guidance. I also want to spotlight Advocis award-winning financial literacy campaign, Financial Advice for All. It's back this November with new content, practical resources, and fresh articles every week. Whether you're a consumer, a client, or a financial professional, it's a resource you'll want to check out and share. Let's keep the conversation going. Visit financialadviceforall.com. Follow Advocis on social media and stay tuned for more episodes. And don't forget, you can stream this podcast on Spotify, SoundCloud, or watch the full version on YouTube. Thank you again for joining us. I'm Stacy Brooks, and we'll see you next time on the Advocis podcast.